Nirupa Shankar, who's a joint MD at Brigade Group, joining us this morning. Thank you so much for joining us on ET Now. Firstly, let's understand Brigade Hotel Ventures recently received SEBI approval for its IPO. How do you plan to actually go ahead and utilize the 900 crore rupees fresh issue? And also, if you could help us understand the growth opportunities that this would unlock for you.
Yes, so we've received the final observations from SEBI. In terms of how we plan to use the funds, most of it would be used to repay our debt. There are a couple of opportunities that we've kept for unidentified acquisitions, and the rest of it would be towards general and corporate expenses. In terms of the number of hotels, we currently have about 1,600 odd keys, and there is a plan to grow that portfolio by about 1,000 odd keys. And this is in various southern Indian markets.
All right, but also help us understand that by when can we expect the listing of the hotel arm to go through, and how much stake will the company hold in the hotel arm post the listing?
Currently, BHVL, which is Brigade Hotel Ventures, is a 100% owned subsidiary of Brigade Enterprises. In terms of the stake, it is yet to be determined. It is dependent on valuation. And with regards to the timelines, we are yet to see. We are in the process of still meeting some of the investors, and hopefully we'll have some insight onto that soon.
Right. Nirupa, what is the rationale behind the investment of that 1,500 crore rupees in Kerala, and what are your expansion plans there?
See, currently we've already been present in Kerala. In fact, we've already invested close to 500 odd crores into Kerala with the World Trade Center Kochi and the 4 Points by Sheraton Kochi close to Info Park. So we plan to expand our presence in the markets where we already operate, and we've been seeing good traction in Kerala overall. For instance, we are planning to add another tower to our World Trade Center Kochi. We are planning to add the World Trade Center Trivandrum, in Trivandrum, of course. That project will, that overall project will be about 1.5 million square feet in size, and it'll also have a portion of a hotel. Apart from that, we've been the owners of a little island in a place called Vaikam, which is very close to Kochi. So we are planning to develop an island resort there. So it's 15 acres of island and a couple of acres on the mainland. And apart from this, we're also evaluating residential for the Kochi market. So there are about 4 different projects that we're looking at. 2 of them are office, a couple of hotels, and of course residential. So we do believe that the Kochi market and the Trivandrum market is ready for the kind of products that we have to offer.
Right. Actually, let's talk about your company. Despite approval delays, you delivered a very strong Q3 performance. If you could help us understand, what has the company done differently in order to register such a strong year-on-year sales growth, while a lot of your peers actually reported a decline? Do you think this growth is sustainable?
See, a lot of it has to do with finding the right parcels of land and making the right kind of product. We've been able to sell about 2.2 million square feet in Q3, totaling to a value of about 2,500 crores. And that's partially because we've been able to get the right product in the right market, in the sweet spot that certain markets like Bangalore and Hyderabad has. One very important feature of what we do, for instance, in Hyderabad, we had a big launch there with the Brigade Gateway at Neopolis. And there it's a mixed-use township concept. It is something that Brigade does consistently well. And we've been able to launch the residences at this mixed-use township, and that's been received extremely well by the clients and by the customers. We were able to sell close to almost 1,000 crores in value of apartments, and in just about a couple of months. So I think our philosophy of doing a live, work, play concept has worked extremely well. Apart from that, like I said, there's a sweet spot when it comes to resi, and we've been trying to create products that suit what the customer is looking for today. As you know, there's been a huge drive towards premiumization in terms of the quality of finishes, in terms of the quality of additional services and services within the apartment. And we're trying to make sure that our product fits what the customer is requiring. So that's been crucial to helping us achieve these kind of numbers.
Right, Nirupa, we do understand that Brigade has recently signed a JDA for a 1 million square foot residential project in Chennai and 2.5 million square foot of project in Bangalore. Talk to us about the gross development value outlook and the nature of these projects, and by when can they be delivered?
See, basically, these are recently signed up projects. So the idea is we have always maintained that we will do a mix of, purchasing lands outright and doing either joint developments or JVs. And we believe, like I said, Chennai is our second strongest market currently, and there's a huge potential for us to gain market share in that market. And we've been looking for lands that are ideally suited and ripe for development and that have clean title. So those are the things that we've been keeping in mind. And we believe that with the kind of lands that we've tied up in Chennai, that we can really go deeper with regards to market share there. A couple of projects, we've made sure that, there's good accessibility when it comes to the land, keeping it close to metro stations. And like I said, the key is to actually price it right. Chennai has been good in terms of pricing for us. In fact, year on year, one crucial factor is that we've been able to increase prices. Just the 9-month comparison is 38%, but in terms of a price increase, but that also takes into account the product mix. So for us, it's there's no one size fits all when it comes to strategy. We're constantly on the hunt for good parcels of land, and we will do whatever is the best fit for that particular parcel of land. So while last year we did a few plotted development launches, this year we did a lot of high ticket items. In fact, Brigade Icon, which we launched recently in Chennai on Mount Road, that was launched at a base price of 27,000 plus, so close to 30,000 rupees a square foot. So that's been instrumental in the kind of average price realization we've been able to achieve for the last 9 months. And yeah, overall, we have been focused on Bangalore, Chennai, and Hyderabad. Currently, most of our top line comes from Bangalore, and we are looking to actually diversify and have split this between Chennai, Bangalore, and Hyderabad, and have a more diversified portfolio.
Sure. Your company recently highlighted strong demand in the mid and the upper mid housing segments, right? What trends are driving this demand, and how do you, then plan to capitalize on the same?
So I think Brigade has always played in this upper mid segment market. I think the way you define it, there are multiple definitions in terms of what is this segment. We've, for instance, I'll talk about Bangalore since that's where currently most of the portfolio lies. That sweet spot has been, between 65 lakhs to say 85 lakhs, I would say, prior to COVID. Now, of course, that sweet spot has actually moved up. It moved up between, a crore to a crore and a half. But now this, like I said, because there's been this drive towards premiumization, we are seeing that even products that are priced between 1 to 3 crores, up to 3 crores, is seeing very strong demand. So because of this move towards premiumization, also land cost has been increasing, especially because of the high demand for residential projects. The cost of land has also been increasing. So that is also driving up the price slightly. So we believe today this upper mid segment and not yet luxury, I wouldn't call it luxury, but this segment lies between the 1 to 3 crore pricing segment. And that's where we plan to price most of our projects. We've always played in this upper mid segment, we've always played in the upper mid segment category, and we will continue to do so. We will, of course, we have some in the luxury segment as well, but as a percentage of our portfolio, it's this upper mid segment or this premium category that is where most of our portfolio lies.
Right. The annuity portfolio is actually seeing healthy occupancies in offices and hotels. How do you see leasing demand and consumer footfalls evolving, especially in the near future, and keeping in mind the fact that there's a big consumption boost that we are likely to see take impact actually in H2 of this financial year, H2 of the calendar year? How much of this impact do you think this will have on the retail sector?
Office has had an extremely good year in 2024. In fact, the country did about 80 million square feet of gross leasable space. And in terms of Bangalore did close to 20 million square feet of leased up area. So in terms of transactions, it's been very healthy. Our portfolio is close to 99% occupied, but we've had some churn, natural course of business churn, and that's been taken up as well. So overall office segment, we are seeing it to be quite healthy. In terms of retail, again, like you rightly said, I think in terms of spending, the number of customers entering the malls has slightly increased. I think it's been strong for the last couple of years, and the increase has been there. But of course, theaters is something that has shown some bit of slowdown. But apart from that, I think FMCG, in terms of fast fashion retail, in terms of electronics, in terms of family entertainment areas, all that has been doing well. Going forward, we believe that retail will also do well. Typically, what we've seen is the larger lifestyle destination malls doing much better than the neighborhood malls. So that's why that's part of Brigade's strategy as well. And we'll be setting up another lifestyle destination mall in Hyderabad. So that's the next mall for us on the anvil. And yeah, basically what we're seeing in the country is this rise in disposable income. The current average GDP per head is about 2,500 USD currently in India. And we're seeing this, we believe that this will go up to at least $4,000 per head as an average GDP per capita by at least 2029. And what this means is that there'll be increased disposable income in the hands of the average Indian, and especially the middle class Indian. And this will lead to more spending, be it with experiences, be it with travel, be it with tourism, be it with shopping, F&B. So basically, we believe that the spending habits of Indians will definitely change.
Right, Nirupa, with this, we'll let you go on that. Really appreciate you taking the time out and speaking with us this morning. But with this, viewers, take a look at the news flash on the bottom of your screen.
If you like this video, then like, share and subscribe to ET Now.